Now, as I said in a previous episode, this crystal ball does not work. However, getting back to inflation, interest rates will probably rise. Now, what does that mean to you? Well, it does mean that things like CDs and money markets will pay more, but it also means that mortgage rates will go up. And if you have any type of variable debt, credit card debt, home equity lines of credit, they're going to go up too. So I want to offer you a little bit of advice. Number one, if you have a variable rate mortgage, you should seriously think about locking into a fixed rate mortgage, 15-year, 30-year, something like that. That way, as interest rates rise, you're not going to be affected by that. If you have a home equity line of credit, you might want to consider paying that bad boy off. If you're thinking about making a car loan or something like that, you may want to act on that sooner rather than later. Of course, finding a car right now is a little bit of a challenge. But the Fed's already raised interest rates. They said they'll raise more. They need to shrink the money supply. And the way you do that is you raise interest rates. Kind of funny. The government prints all this money, and then the Fed works to reduce it. But in any event, that's one way to minimize inflation is to get less dollars out there. And if you raise interest rates, you're going to get more people putting money in banks. So you're going to have less money floating out there. And you're also going to minimize new loans that are going to be going out. And so this is what they do. Do I think it's going to get to like 1970s, right? I don't know. I hope not. But in fact, I don't think so. And the reason I don't think so is because much of our government's debt is financed on short-term interest. And, if those interest rates get too high, well, government's going to have difficulty servicing that debt. So we got a lot of challenges ahead of us. We can get through them, but we've got to be cool head about it. So if you want to talk about this, that's what we're here for. Give us a call. If any of your family members want to talk about this, reach out to us. Give us a call. This is what we do. This is what we do for you. If we do it for you, we're going to do it for your family. All right? So interest rates, expect them to go up. Don't panic. Work through it. If you have debt, let's talk about it. Let's see if we can come up with some strategies to help protect you from this. Take care. Bye-bye.